Hi guys, welcome back to my channel. I'm your host Miss KK and this is The Wave. It is your weekly show that looks at topics related to personal, family and business finances, and our hope is that by the time we get to the end of this series, you are better equipped to make sound financial decisions. If you are new here, thank you so much for stopping by. We really love having you on board. Please consider clicking the subscription as well as the bell icon in the comment below so that you can be notified every time we upload a new video. And if you're already a subscriber, thank you so much. Your continued support, interaction and comment as well as sharing the videos with your friends and family is highly appreciated. Thank you so much for following our Enlightenment series last week on the MTC IPO. And if you haven't watched part 1, kindly please check out that part because we were building off the foundation and the knowledge that we've already shared in that video. And to avoid being lost, please check it out. So today I'm going to be looking at the gist of the prospectus. It is quite a lengthy document and therefore I won't be able to highlight everything that is in that prospectus. I've just taken a few topics from that I actually think are fundamental or crucial in you understanding, how the prospectus work in general and whether buying MTC shares is actually worth it. So in order, I'm going to be discussing, looking at the industry analysis, then I'm going to be looking at what your investment strategy could be, as well as influenced by your risk appetite. After that, I'm going to look at companies' performance, i.e. how MTC has done over the last 5 years. They've actually presented 7 years worth of data in the prospectus. Then I'm going to look at the competitive landscape, might combine this with industry analysis, and lastly the strategic outlook as to what MTC is planning to do in terms of driving growth and in terms of increasing its market share with all the money that they're actually planning to raise from this IPO. So starting off, MTC is really operating in a telecommunication industry. And each industry has its regulator. So in Namibia, CRAN issues telecommunication related licenses. MTC is one of the companies that has a spectrum licenses. Other companies that are operating in this industry have other forms of licenses that are not really similar to MTC. Because of that, they have a competitive advantage of some sort. When they've looked at the landscape, they are saying that at least 28% of Namibians are actually active on social media, with 51 of them having access to internet. So that means there's still more room for a lot of Namibians to engage with social media. Plus, there's still more rooms for Namibians to start making use of the internet. So in terms of data usage and in terms of penetration and customer acquisition from that landscape, there's still room for more growth from an MTC perspective. However, their main line of business, which is your voice services, they are currently capturing 90% of the market share, meaning they've sort of reached market saturation. So if they want to derive growth in terms of revenue and if they want to grow this business, it would need to be from other services other than customer acquisition from voicemail services. So your calls that me and you make to each other, MTC has sort of reached a saturation. So if you have to look at the face, or rather the stage of business where they are currently a fully established company. The revenue is very stable. So just to take a step back, a company goes through a different business cycle. You normally have your startup phase where a company is likely to be making a loss. And this is because they are still trying to absorb the cost of capital. They're still trying to absorb the cost of establishment. And they're also still trying to, scale up so that they can take advantage of what is called economies of scale. Then they get to a point where there's a growth phase where they're actually year on year revenue is growing, i.e. that's where MTC was moving from only having 10% of the market share to 50% to 80% until where, maybe up until 8%. Then you have your stabilization stage where you've reached market saturation. You can't really drive growth that much rather than just maintaining what you currently have. Then you might have, some businesses, they actually go a downward spiral where if there's a new entrant in the market and that person can, that company can provide better services to the existing customer, then a particular business can actually start losing its market share. And in the process of losing its market share, they may actually start making a loss. And ultimately, if the competition gets so stiff, they can get out of business. So I'm just saying that to contextualize. So MTC is actually at the stage where its revenue is stable. All right. So in terms of industry players, they are currently, like I've mentioned, I don't know if I've mentioned it before already, there is, Telecom, which is still a related party of MTC, because they're actually owned by the same shareholder. So there's Telecom, then there's MTN, but MTN is mainly just, MTN and Paratus are mainly just, playing in the fixed line internet supply, not really in your voice services. And then you also have some of the municipalities and some of the utility companies that I'm actually seeing that they are acquiring some fiber optic licenses, where they're actually also moving in line of providing affordable internet to their customers. So basically that's sort of the industry landscape that I wanted to lay up. So you now need to take back and say, okay, there are a few players in the industry. What gives MTC a competitive edge? So if you were to invest your money in MTC, what would give MTC a competitive edge? So they've sort of listed a few things, but I'm just going to touch on some of them so that you can also contextualize it. So number one is in terms of market share. So they've got 90% of their voice services, which is their main line of business. So that means that is a competitive edge for them. So if they get a new product, it's so easy for them to get customers, because they can just, send notification to their million subscribers, and then people will easily, hopefully, convert if that new product is actually better than what is currently being offered by the competitor. Then they also have a well-established distribution network. So I don't know if I've actually spoke about it in my series of videos where I did why certain businesses fail, and one of it is actually the barrier to entry or barrier to exit a particular industry, because of the fact that for you to do what MTC is doing, you need network towers to transmit your services, and MTC has that advantage that they've already established and spent so much money on this network facility. So if they are to on-sell a similar product that relies on using the same network, it will be so easy for them, because they've already spent the money. If anything, they will just be upgrading the capacity on those network towers in order for it to be able to cater for the additional services that they are adding on. Another thing is brand advantage. We all love MTC, and I think that's why a lot of us are so emotional. We just want to buy the shares without actually doing due analysis, because we hold it dearly to our heart. So the brand advantage means that MTC, if you have to compare to other industry player, MTC definitely has a brand loyalty in terms of the views of the customers. Financial position, they've been able to deliver strong growth over the last couple of years. So they haven't really made a loss in the last couple of years, as if I can recall correctly. I'm going to correct it here if it's not the case, but that is also an advantage for them. And lastly, they also consider themselves a leader in innovation. They've also been able to come up with products. So if you think about it, back then it was first sending an SMS and you only get charged 40 cents per day. Then they moved away. Then they moved to multiple away. Then they moved to Tamba transfer. So they've actually been able to bring new products in the market. So that way they actually are a leader in innovation, because a lot of their competitors weren't able to really innovate in the same way they were able to innovate. So that's really the industry analysis that you need to be looking at. I haven't touched on competition yet, and the threat of that industry, because I want to look at that when I look at the company performance and I look at competitive advantage as well as the strategic outlook. So assuming you are understanding this industry and you really are happy to go ahead, what is your investment strategy? I don't know if I've mentioned it in the video last week also, but you can sort of have two investment strategy. You can have one where you are really holding this MTC shares as a long-term growth. You are in it for a long time. You are hoping the company, as they innovate into new products, the share price is going to appreciate. And when you eventually want to exit at some stage, you are going to be selling your shares at a profit. Or alternatively, you really want a consistent income stream. You are investing in these shares because you want dividends, and you are hoping that the company is going to be declaring a strong dividend year on year. So if that's the case, then you are sort of investor that is looking for a recurring income. So you need to be clear on what is your investment strategy here when you are investing in the MTC shares. Because if your investment strategy is not consistent with what the company is doing, then you'll be disappointed. You're expecting your share to grow, yet you want to sell it within the next 2 years. Or you are really hoping the company takes its money, reinvested in, push for future growth, and then at some stage, 5 years or 10 years down the line, they start declaring dividend. So you must just be clear on which of the strategy are you willing to take as part of investing in this MTC shares. And then I want to link on to risk appetite. So really risk appetite determines on where you invest your money. Remember I said you need to look at the opportunity cost of investing your money, and you need to look at the risk attached to you investing your money in MTC shares. So remember that there are sort of two different investment sort of option. You have an investment option where your capital is safe, and you have a new investment option where your capital is actually not safe. And investment options that are likely to have a capital that is guaranteed are sort of like your money market account, where you invest in a particular bank, they add interest on your capital, and when you pull out your money, your capital is still there plus a little bit of interest that you've earned. Contrast that with riskier investment like shares. You could invest your money currently today, and the MTC price is being listed at $8.50, and 2 years down the line, they've actually lost value, and you're currently sitting at $4.50. So in that case, if you were to sell your shares, you are actually selling it at a loss. And MTC is not going to refund you for actually the loss in value. So you need to be sort of understanding that shares are one of those investments where there's a risk attached to it, but also there's an upside to it. So if the company were to do extremely well, you are guaranteed a high dividend return, and you're also guaranteed that should you want to sell your shares someday, your investment is going to come back double or tripled. So that is really the risk appetite. So the higher the risk, the greater the reward, but the lower the risk, the lower the reward. I'm mentioning here so that you can understand that if you are investing in shares, there's a chance that you are going to lose what you put in. Let's now move on and look at the company's performance. The company's performance is normally summarized in the annual financial statement. And as I've mentioned, MTC up until this point was a privately held company. So that means their financial statement were not publicly available. But going forward, if you want the financial statement, you'll be able to find them on their website because it's now a listed company. So financial statements generally tend to tell the history of the company, how it has been performing over the last couple of years. They don't look at forward-looking information, except if there's a commentary maybe done in the director's report. And MTC has then thus able to sort of include the 5 or 6 years worth of data, as in how the company has been performing over the last 5 years or 6 years. Then they've also included 1 year of focus. As to say, what are they thinking the company is going to perform in the next year. So normally financial statements are interpreted in terms of ratio. These are sort of indicators that can give an investor a feel on how their company is performing and how it's affecting their investment in the company. So there are a lot of indicators in the prospectus, but I've just taken a few that I think are easy to explain to everyone, and that I also think are critical in everyone understanding, so that you can determine whether really, if you were the investor today, will you be happy with this ratio? So the ratio that I'm going to be starting off with is the net profit margin. So this is normally your net profit before tax. So it looks at what dollar of sale has the company able to retain in profit. So assuming for every dollar of airtime that you sell, how much of that portion is the company able to retain as profit? Meaning you must take that dollar, take out all the costs that a company incurs, meaning the cost of providing for that dollar in terms of the portion of infrastructure, the labor, the rent, the services that they are paying. So after they took all those costs, how much of it is actually retained as profit? And obviously the net profit margin would differ from industry to industry. The more competitive the industry is, the less profit margin that industry is likely to have, simply because the players in that industry are scrambling for customers, and they're trying to, one of the factor that influences where customer buy is generally the price. So for those industries that are competitive, your net profit margin is likely to be lower. Compare that to industry where you are the only dominant player. There isn't really much competition, so your profit margin, if you can maintain your cost very well, is likely to be healthy. So MTC has been able to deliver sort of like a consistent net profit margin at 27%. If you average over the last couple of years that they've provided in the prospectus, their profit margin is around about 27%. So that means for every dollar that they generate, they are able to keep 27 of that as profit. But if you do look at it though, it's somewhat showing a downward trend, because if you look in 2016 was 25%, then it was 29%. The following year it went to 32%, then it went to 30%, then it's now 29%, then it's expected to go to 22%, and then it's 24%. So in as much as it is a healthy 29%, it hasn't really been stable, and it's somewhat illustrating this downward trend. That means that the industry, if anything, the industry might be getting competitive, or the company is struggling to maintain their cost, or they're unable to increase their sales price to match the increase in the cost. Those are some of the various factors that can result in a company sort of experiencing a downward trend in your net profit margin. Then I'm going to look at what is called return on equity. So this is just how good is a company in generating returns for its shareholder. Because remember, when you invest in the shares, you become a shareholder, and the money that you've contributed towards this business is actually called equity. So if you take your profit over the total capital contribution that all the shareholders has given, that should also show you how much is the company sort of generating for its shareholders. And for MTC, it has been averaging at 37% for its shareholder over the last couple of years. But then again, it's also somewhat on a downward trend, because if you look in 2016-17, it was 48, then it went to 32%, then it went to 48, then it was down to 38, 35, 29, and 31. So somehow, in as much as we are saying MTC is in a stable sort of status, the numbers are sort of somewhat not reflecting that stability. And it's also to a large extent going into the downward trend, because it peaked at some stage at 48%, and it's now on a downward trend from 38 to 35 to 29, and it's expected to be at 31%. So if you look at it, if you are likely to be the investor that wants a quick return, you must actually think about the fact that the return on equity hasn't been stable, and it's actually projected in the next financial year to be lower than the average over the last couple of years. So factor that in mind when deciding to make your investment decision. And then I also then want to look at the loss ratio, which is the dividend payout. This is just what portion of profit is a company paying out as dividend. In the prospectus, they're saying that they've been able to pay up to 70% of their profit as dividend. And it was simply because previously it was also because it was a government funded entity, or rather a government owned entity, because the NPTH is owned directly by the government of Namibia. So it was actually a parastatal. So, but currently they were able to pay 83% of their profit in dividend in 16, and in 2020 they've actually paid more than the profit. They've paid 127% out in dividend, but in 2022 they are projecting to only pay out 66 point something% as dividend. So if you were to invest, I had done the calculation somewhere. If you were to invest 200 shares in MTC, I think you are looking towards getting 120 something. I'm going to put the exact number here in dividend. So really, that's all I wanted to highlight. So given these numbers, right, they are not as stable as we would like them to be, and they are sort of indicating a downward trend. But I'm going to come to that now when I discuss the competitive landscape. So MTC, in as much as they don't have a direct competitor in voice services, they actually are facing stiff competition in data services and internet provision, because now you have MTN that is mainly focusing on fixed line services, then you have Paratus, and then you also have Telecom that has also been able to provide internet based fixed line based internet. Plus, you also have some utility company that are also looking at installing fiber optics to be able to provide internet to people. So, if anything, the industry that they've been able to sort of enjoy dominance is sort of quickly fading away. And the industry that they are looking to expand, which is provision of data services, provision of internet, and the provision of cloud services, etc. That is quite a very competitive industry. And I don't know if they will be able to penetrate at the same speed they've been able to penetrate the voice market. And I also don't know if they will be able to do it efficiently compared to the other players, or compared to, a lot of things. So that is the one thing that I just want to highlight. So think about it yourself. If you were to start a business in an industry that is competitive, will you be able to succeed? what would you need to do in order for you to penetrate at the speed that you'd like them to be. Plus, in terms of the strategic outlook, yes, they've highlighted that they are going to be expanding more into, internet provision. They've also highlighted that they're looking at mobile financial services, and mobile financial services is really just your facilitations of payments for people that don't have bank accounts, the use of wallets as a payment services, the use of your cell phone to make payments. So that industry on its own as well, it's also, in as much as there's a market for it, because there's still a lot of Namibians that don't have bank accounts, that industry is also open to any other company that is also offering mobile services, the likes of your Kazangs and the likes of Mula Mobile, for example, can also easily play in that industry. So that industry is also likely to be competitive. Plus, the other thing that they are actually looking at is Internet of Things. With the fifth industrial revolution, there is smart automation, smart homes, smart offices, smart everything. And because of the fact that the world is connected via internet, that telecommunication industry presents a huge opportunity for upcoming business. But the problem is, because some of those things don't rely on this communication licenses that had previously given the industry players a competitive advantage, it all of a sudden changes the playing field. Instead of them just competing against your local Namibian companies, they can compete against the global industry players of the world. So in as much as they've been able to enjoy growth over the last couple of years, I believe there is a whole new opportunity, a whole new landscape that they are going to be playing in. Yes, it's lucrative, but it's going to be competitive. So their ability to penetrate in that industry, acquire customers in that services, and also do it effectively and efficiently to return for you, to deliver for you a good return, for me, in my mind, is questionable. So that's all I wanted to bring you tonight in this episode. Really make up your mind. It's if you think about it, looking at past performance, very good investment, stable investment, very good blend. Looking at forward information, very competitive industry that we are looking at, very lucrative opportunities that are there. You could take a risk with the investment and reap a very good reward, because that means the telecommunication industry is the future of everything. If you were to bank your money on anything at this point in time, it will probably be pharmaceutical, because the world is going through a global pandemic, and the pharmaceutical companies are actually making a lot of money from the pandemic. And that is because the industry is evolving, and they're able to come up with a solution, and who knows what lies ahead in terms of medicine. So it's a really good industry. Similarly, on the same token, telecommunication is the future of everything. Internet of Things, the future of smart automation is everywhere. We are talking about electric cars, we are talking about smart homes, we are talking about online learning. There is a huge potential. The only problem is it's open to everyone. It's not a traditional industry, and I can easily get a digital market from Bangladesh as opposed to getting a digital marketer from Namibia. So that's really what you need to be looking out for. I'm going to leave it here. Thank you very much for stopping by. I really love having you aboard. Please consider clicking the subscription if you haven't done so that we can stay connected. If I decide to, I'm gonna have a sort of closeout video. Otherwise, it was a pleasure giving you some insight into this IPO, and I really hope with a little of information that I've given you here, you are better informed to go decide what to do next. Thank you very much.